This is Michael Douville. I had the distinct pleasure and honor to speak to Charles Nenner. Now, Charles Nenner is one of the foremost cycle researchers in the world. You're going to see him a lot on Bloomberg and CNBC. He does a lot of interviews because he's got great research. He sent me his volatility chart, and he and I discussed the volatility. I hope you like this video. If you do, give me a big thumbs up, and you're always welcome to join our subscription. My best to you. Bye-bye. Sensitive. This is the volatility index. So and again, so this is the date is April 2nd. So this is very, very recent. And this would be this timeline right through here. So it looks like we're going to be starting to go up into a little more volatility.
Right. So we're buying some volatility over here. It's pretty cheap. And it also means that the market is getting risky because, as you know, as the market is getting weak, then people buy volatility. So this is actually a precursor of what could be. So the market starts to be risky because the volatility index can start moving up. Now, as you see, going back to you see 3 peaks, 4 peaks. You see every peak was actually projected by the cycles. Mm-hmm. Usually, those are very nice trades with a very small investment.
Well, we have another peak coming up here. I'm not sure what the timeline is, but it looks like it's fairly soon. Is this one of your targets right here?
Yeah, I don't know. But that's it. I think that's the end of May or June or so.
So you and I talked about this before when we were talking about hedging a real estate portfolio. You would go and short some builder stocks, and of course, if the real estate industry started suffering, you'd start making money on your shorts. So that's kind of along the same line, isn't it? So if you've got a portfolio and it starts looking at turmoil, you're suggesting like a hedge, are you not?
Yeah, then you know, it's much better than going short. You buy the VIX. You just need a broker, or not even every broker can do it, but it needs a calculation how much VIX you should do based on your portfolio.
So are these actual options, or would this be something like TVIX or one of the?
Well, there are all kinds of the options, and there are futures, and there are ETFs. There's all kinds of ways to play it. If you Google it, then you find all these things.
So fairly easy for like a novice to do this, just protect their portfolio, and of course maybe make some extra income on this, because it looks like it's pretty pronounced that you're going to get a pretty pronounced spike right here. It's following your chart. It's amazing to me how your cycle charts. It's just amazing, because you're right. These cycle, your work is predicting what the market is going to do, and it's just pretty doggone remarkable, Charles. It's kudos to you. It's beautiful. Is there anything else that you want to talk about on this chart itself?
No, not on this chart, but I always come back to the fact that these things, markets move like on the news from next year. If you know the news from next year, then maybe a good investor. But nobody talks about the news from next year because they don't know. Even the Fed doesn't know. They look from months to months. So that's why these cycles predict what the news is going to be next year and how people are going to look at the news. So also the interpretation of the news is important. And that's why we can predict what markets do.
Well, I love your saying, I don't necessarily know why it's going to happen. I just know what's going to happen. And
right.
it actually is more important to know what's going to happen than why. If you know, it's just so great. So should we go to the next slide?
Yeah, I just want to mention, because most firms don't know what's going to happen. They all write why it's happening, but that doesn't help anybody.
Doesn't help anybody at all. Not at all. And I have been following you for years, and your advice has just been exemplary. And just you've helped me and my clients. So thank you. Well, I hope you enjoyed that volatility chart. It was a great discussion. It's something you really need to pay attention to. And when Charles Nenner speaks, you really need to listen. So on our next video, we're going to talk about the 30-year bond. I hope you enjoy that one too. If you like this, give us a big thumbs up. My best. Bye-bye.